Let's move on now. The crisis of confidence plaguing Gautam Adani is deepening, with over a third of his group's stock value erased in less than a week after Hindenburg's fraud allegations. Shares of Adani firms resumed their fall on Wednesday, a day after the group's flagship company's $2.5 billion share sale, while the Indian empire managed to pull off the share offering. The support broadly came from large investors. Retail investors bid for only 12% of their category, despite additional discounts. That is in contrast to Adani's plans to expand his shareholder base and invite the average normal Indian mom and dad as shareholders. What the Hindenburg report has also done is to erase Gautam Adani's personal wealth. He is no longer Asia's richest person, and he's knocked off the top 10 billionaires list as well. Just a few months ago, Gautam Adani was the second wealthiest person in the world. According to Forbes, he is now the 13th richest billionaire, with his net worth falling by almost half to $80 billion. Adani Group's stock rout has deepened, with losses climbing to $84 billion and counting. So, despite the success of the share sale of Adani's flagship firm, the Indian billionaire still faces his biggest business and reputational challenge, as his battle with Hindenburg shows no signs of abating. To add to Gautam Adani's worries, Australia's securities watchdog on Wednesday said it is reviewing Hindenburg's report to determine whether any regulatory action is required. Hindenburg, in that report, had accused the Indian empire of business malpractice, including improper use of offshore tax havens, among other allegations. In Australia, the Adani Group operates the Carmichael coal mine and the Abbott Point port. That news on the Australian regulator has extended support to market charter, which has become louder on what will the Indian securities watchdog do. India's capital markets regulator, the SEBI, has investigated some of Adani's issues over the past year, following domestic media reports. And according to Reuters, the SEBI will continue this scrutiny and use any fresh information from the Hindenburg report. Over the past week, global stock market indices providers and financial institutions have also voiced their intent to review information on the research firm's allegations. Currently, the market bets against Adani are still mostly an equity story. However, spillovers into the credit markets can happen quickly. A Bloomberg report shows that Adani Green Energy faces risks from a weak balance sheet and liquidity, with $1.25 billion bonds due next year. For now, there are no concerns of a default, but the Adani Group's green energy bond is still down nearly 20%, and investor concerns over Adani Group's ability to refinance its debt have risen. WION is now available in your country. Download the app now and get all the news on the move.